Shell and BP have recently announced big increases in profits, but the Labour Party is demanding a windfall tax on oil and gas companies operating in the North Sea. But what exactly is a windfall tax? A windfall tax is a one-off surtax imposed by governments on businesses that have benefited from something that they were not responsible for. The purpose is to redistribute excess profits in one area for the greater social good. As we come out of the pandemic, the demand for oil and gas is going through the roof, and so are the profits of the oil and gas companies. By imposing a 10% tax, about £1.2 billion would be raised to help households deal with rising energy bills. Ofgem have recently announced that UK householders will see a 54% rise in their domestic energy bills in April. BP recently posted a profit of $12.8 billion for 2021 after oil and gas prices surged in the second half of the year. A week before this, Shell reported profits of $19 billion. However, these profits have come off the back of a disastrous 2020 when the world went into lockdown and the economy plummeted. Both Shell and BP were forced to slash their dividends. Whether a windfall tax on the oil companies will actually happen or not, we'll just have to wait and see. Windfall taxes are nothing new, and they have been imposed on British companies before. In 1997, the Chancellor Gordon Brown announced a windfall tax on Scottish Power, United Utilities, BT and BAA. And it's not just Labour who have imposed them, the Conservatives have as well. Geoffrey Howe imposed a windfall tax on the banks in 1981. He later levied a special tax on North Sea oil and gas companies. The argument against a windfall tax is that it might slow the company's transition away from fossil fuels and hamper their investments into renewable energy. The oil giants argue that they are facing an unprecedented challenge. While the global economy remains heavily dependent on fossil fuels, they are being urged to shift to lower carbon alternatives, and they need big profits to fund that transition. So a windfall tax would reduce funds the companies have to build wind farms, generate hydrogen, or install more electric car charging points. BP have been making greater strides than most to increase its renewable power capacity 20-fold by 2030 and reduce its oil output by 40%. For transparency, I have held Shell and BP for many years, and I tend to buy them on the dips. You can see from the 5-year graphs that the share price movements are similar because the profits of both companies are strongly linked to crude oil prices. Over the last year, the share price of both companies has risen at least 50%, and over the last 6 months they have risen over 35%. In 2022, Shell is up nearly 20% and BP nearly 19% already. Shell and BP have grown to become the largest two companies in my portfolio after the recent rises, so I will be considering trimming the holding slightly so that my portfolio is not dominated too heavily by one sector. It is well documented that investors who rebalance their portfolios from time to time tend to gain an extra 5% in the long run. 5% might not seem a lot, but over a lifetime it can be huge. I've held Shell for 10 years. The value is now over £32,000. They currently pay a dividend of 3.6% and they pay quarterly. The last dividend I received from Shell was in December and they paid me a nice Christmas present of £285. If you reinvest the dividends, your portfolio will eventually start to snowball, giving you higher and higher dividends each year. I've held BP for 12 years. The value is now over $27,000 and the dividend yield is 3.9%. They pay out quarterly. BP also paid me a dividend in December and the amount was £260. Because I make good use of a stocks and shares ISA, I don't pay any tax on my dividends. Click up here to see more videos on Shell and BP. Click up here to see how much passive income I earn each month, and click down here for my latest video. Please give this video a like if you found it useful. Thanks for watching, and may the markets go your way.